Hey guys, what's up and welcome to a new Tesla update video. So today, once again, let's go over the market. Let's talk about what happened, what we can expect, and all that good stuff. So first and foremost, first and foremost, don't forget to hit that like button if you enjoy. And of course, none of this is financial advice, make your own decisions, etc., etc. But Tesla ending the day, actually about to end of the day, just about a minute left, down just over 3%, putting us at about $174. Now, obviously, this isn't ideal, right? Taking a look over here quickly, let me see actually. So that's actually getting some nice buying pressure coming in at the very end. You can see here, beautiful little buying pressure right to end the day off, right? So we'll see where exactly this closes at, but it really should be not anything much lower or higher than 174, right? So let's just talk about that and just see kind of, what it means. Now, again, I mean, probably the main question people have is, is it over, right? Is the bullish thesis over? Are we just straight back into like bear territory and whatnot? Well, technically, again, we never really left bear territory. It was just a potential short-term bullish thesis, right? Or short to potentially medium-term. However, even with that being said, I still don't think it's completely over and completely gone. Now, I did say yesterday how if we do break below this level over here of around 176, 177, that does make things a little bit more conspicuous, right? A little bit more less assuring, I guess, let's just say. However, even with that being said, it doesn't mean that it's all over yet, because as I said yesterday as well, even if we do break this level, even though it makes it a little bit more shaky, it's still not over, because we have not only this gap fill, which can definitely serve as support at pretty much 170, but on top of that, we also have a potential double bottom at pretty much 167, 168, right? So that general level. So now, essentially, what I'm personally expecting is, in all honesty, I'll be surprised if we don't come down to this gap fill at 170 at the very least, if not maybe even as low as about 167 to 168. That would not shock me whatsoever. And on top of that, it also would kind of coincide with the way the RSI is overall lining up its higher lows, right? You can see we started here, made a higher low, make the line across, and you can see, if we just go down a little bit longer, or a little bit lower rather, it'll most likely have this RSI drop back down to pretty much this line, to where I do think we'll probably get the actual main bounce, where things can potentially finally get interesting for the bulls once again. And that is kind of what I'm expecting at the very moment. Now, we'll see if that actually happens, of course, but personally, that's what I'm waiting for. And, in terms of, trading and making any form of trades whatsoever, that is essentially what I'm waiting for as well, to continue on selling more puts. I do have 2 puts sold, one weekly, one monthly, and I plan to sell more if we do come down to this level of between 170 to 167, and especially if I'm seeing some, support coming in. And, it looks like it's going to be a pretty likely chance that we get a nice bounce from there. I will sell, of course, even more puts. And again, the way I personally trade these kind of situations, guys, is I am putting myself in a situation where I can't overall lose, where the worst case scenario, literally the absolute worst case that can possibly happen to me, is that I'm forced to buy shares at a price I probably would have bought anyways normally. But at least in this case, with selling puts, I get paid a bit of an extra premium up front, and then potentially I am also going to be buying them at that price, of course, if it ends there by the expiration date, and of course within the strike, right? So in the money, essentially. So that's the way I look at it. So essentially, worst case, I'm just buying more shares, right? That is, of course, it. I mean, I guess technically the worst case is Tesla goes bankrupt and everything I own from Tesla shares is completely going to zero. Obviously, the chance of that, not 0%, but exceptionally low, right? The chance of Tesla going bankrupt is pretty much non-existent, but, technically there's always a chance for anything. You never really know for sure. There's always a risk you have to be willing to accept. But again, all that being said and done, again, I personally would not be surprised if maybe we get a gap down tomorrow. It would be surprising if we get a massive gap down, like a 2%. Then again, it's not impossible, in all honesty, at least in this kind of market, right? But, the main question, of course, people probably have as well is this inverted head and shoulders, is this inverted head and shoulders pattern done? I wouldn't call it completely done just yet, especially if we actually get a bounce, within the next day or two, because like I said, I have that kind of, 2 to 3 day rule. However, it absolutely is looking more shaky. It's definitely looking a lot less solidified of an inverted head and shoulders bounce, right? Now, again, the thing with inverted head and shoulders, or just head and shoulders in general, is that the shoulders don't have to be absolutely perfectly aligned at the exact same level, etc. Technically the neckline doesn't have to be perfectly aligned as well, right? You can see technically we don't go all the way up to this neckline up here, where this one up to 201, right? We went up to 198 essentially, right? It doesn't have to be like picture perfect, just absolute, crisp, just exactly on the exact points, just decimal for decimal, right? It doesn't have to be like that. However, even with that being said, the fact that we are entering the territory of the head, like I said, is not something I ideally want to see. Now, I wouldn't call this completely done, and that's it. The inverted head and shoulders is completely destroyed. But I definitely would want to see a bounce substantially sooner than later, to say the least. Now, again, even in theory, if this inverted head and shoulders pattern were to just completely, cancel out and just not be a thing anymore. And in my opinion, if we come down to all the way this gap fill, it's still technically in play, but it's definitely looking a little more scuffy and kind of sketch. I would personally be looking at this as more of a double bottom. Now, we did look at these double bottom potentials several times before, and it has failed us several times. Failed us here, failed us right here, and potentially might fail us again here, right? Because again, we had double bottom, actually like a triple bottom right here, 1, 2, 3. Then we came down here, would look to be a potential double bottom right here. Unfortunately, that fell apart. We collapsed down and bounced. Now we're potentially coming down to once again another double bottom. We've failed it several times before, twice actually already. So this definitely could be another instance of that as well. But, until proven otherwise, you have to assume that it is going to be a potential double bottom play, right? Until, of course, something, happens that makes it completely invalidated. For instance, would be a break down below anywhere between 170 to 167. Anything breaking below that, and especially not getting back above, would very much be an invalidation of that double bottom situation, which of course would be in theory a bullish reversal, right? So we'll see what that overall ends up kind of forming into. Right now it's only Tuesday, I believe, right? Let me just double check it again. Actually, it's Wednesday. My goodness, time flies. But yeah, it is Wednesday, and the weekly chart, just so far at least, right? We still have days, of course, in this week to fix this and whatnot. But you can see the weekly chart not looking the best in the entire world. We definitely want to, again, as usual, at the very least, come back up above 177, if not at least 180, ideally, right? We want to definitely, absolutely come back above that. Now, the cool thing is that I'm noticing in the weekly is you can see we are actually, as of right now, the weekly candle is, of course, overall making a lower low because, the weekly's RSI does, the RSI's position is where the candle closes, not where the candle's been necessarily, at least on the weekly or the daily, right? It's where it closes. Very important to understand that. And you can see we are actually closing at the very moment so far, at a lower low. However, if you take a look at the overall RSI, it's actually starting to slowly develop a higher low. So even the weekly is very slowly starting to develop a bullish divergence as well, which is a great sign, and that's kind of what I want to see actually. So that's good. This does mean that it will still take definitely some time for this to truly play out, especially on a weekly time frame. That will take much longer for it to truly play out. But the fact that we're starting to see some signs of that is a good thing. Now, that does not mean that we cannot go lower. We absolutely can still go lower, and this completely can still even fall apart. But that is still at least, a little bit of a glimmer of hope, right? Which is just something to consider, something just food for thought, I guess, more so, right? So, but yeah, overall, guys, that is essentially what I'm seeing at the very moment, right? Pretty much the fact that we came up in the morning, by the way, also very important. The fact that we opened up, rallied up to pretty much gap fill and this overall major resistance of 180, and then just got rejected and slapped back down, and then just couldn't really get back up above it, and just maintained underneath what was yesterday's support of 175, and we pretty much got rejected at that like twice almost here and here, is not great, right? That is obviously not the best thing in the world. That is potentially bearish, which is why I wouldn't be completely shocked if we do just come down to this gap fill, or maybe even come down all the way to this 167 once again, and potentially hopefully form a double bottom and get a bounce from there. But that, to me right now, these two like small levels, which you can argue is just one overall major level, again 170 to 167, is essentially the last like line of defense, if you will, right? So that really must hold, and if we don't, then we do snap this level, then it's going to be pretty painful. And I do think that we're just going to pretty much collapse all the way down to potentially all the way into the 150s, which is where I am currently selling my puts. If you're wondering, I am selling my monthly puts, at least I am selling in the 160s. So right now I have 165. I will be selling at 160 if we do go for the gap fill, and if we fall even lower, I will start selling 155s and things like that as well, right? Because I'm personally willing to buy in the low 160s to somewhere in the 150s range. 150s to low 160s is my personal like super buy range, and that's where I have that reserve cash ready to go, which is why I'm personally starting to sell these puts, so that if we do get there, great, and if we stay there up until the expiration of the end of the month and I'm forced to buy, wonderful. I'm willing to buy at that price regardless. I think that's an amazing price for Tesla, just my opinion, of course. However, if we don't and we do rally, well, I still have a massive position regardless in Tesla. Good for that position, and on top of that, at the very least, I will be able to take in that premium and also get at least something from it, right? So I personally view it as a win-win. This is not money I need anytime soon, right? And I'm personally just slowly accumulating, bit by bit, not worried whatsoever. I know a lot of people can be freaking out and whatnot, and understandably so. It is, of course, a little bit of a scary situation to be in, especially if you bought like really high, like even in the 300s, right? Of course, naturally, but I'm not too worried. It is what it is. It's just how this thing goes, right? It's just it is what it is, right? You know, there's no reason to get freaked out about it unless you need this money fast, or you're doing some kind of degenerate plays where, you know, it requires like some short-term movement to go in your way, which is usually what options are when you're buying them. And, you know, if it doesn't, then you pretty much go to zero. I personally don't do that kind of stuff. I rarely do that. I play it very safe, especially in a market like this, because I don't want to, you know, essentially just destroy my account. Let's just say that. But either way, all that being said and done, that's kind of what it is, guys. That's kind of what I'm seeing. We are starting to see some buying pressure. You can see come in here as well, but it's not extremely convincing just yet. And again, personally, right now, would not shock me absolutely whatsoever to come down to this gap fill of 170, maybe even as low as about 167.5. Potential for that double bottom as well. Would not shock me whatsoever. In fact, I actually think the chances of that happening are fairly likely. If it does, fantastic. If it doesn't, fantastic, right? That's just the way I view it. But either way, that's what I'm seeing. Let me know what you guys think down below, and I'll see you tomorrow. Peace.